What's up, everybody? Welcome to the Stocks channel. My name is Cory and tonight's episode is going to be your stock market technical analysis update. Before we get into the charts, go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First off, we're going to take a look at the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right. So with today's close on the SPY ETF, we see we went down negative 0.12%. after opening well below that around $343. So we had quite the volatile day with the gap down open, but we see buyers stepped in and we did find support right on top of that 13 EMA, and we did close the gap at $343. So if you've been following along on the channel, you remember we said we were expecting a 2 or 3 day sell-off, which we were calling the bull shakeout. And that now looks like the bulls that were the weak hands have now been shaken out, and it looks like the buyers have stepped back in. So remember, you could have aggressively traded that gap closure and the bounce. If you go to the 1 hour chart, you can see that the gap close at 343 was right at the open, and we did get a confirmation bounce. 2 hours later, we did bounce off that level. So if you want to trade these gaps and these support levels aggressively, don't forget to switch to the 1 hour chart, and you could see we did get that confirmation bounce. And after 2 or 3 hours, you could have decided the bounce was in, bought up here, and set your stop loss below support. And as you can see, you would not have gotten stopped out if you took that trade. And if you were wrong, you would have had the risk to the downside and you would have got stopped out where you set your stop loss. So risk is always up to the trader. And if you want to do these riskier trades, you're going to have to jump into these 1 hour charts to get the confirmation bounce. If you look at the daily chart, it does look like we also got a confirmation bounce, but your entry is not nearly as good. Now, that doesn't mean we can't continue the sell-off just because we've seen a bounce, and that's why you want to set those stop losses. But I do think we're about to see the last hoorah before this finally does go down into a more steep correction than what we've already seen. And I still think our price target up here at $355 is still fully in effect. So don't forget, we have that bullish trend, and now we're getting confirmed bullish price action bouncing off of that critical support level. So remember, this bullish trend is still intact as long as these moving averages are stacked to the bull side. We see the 5 EMA still trading above all the moving averages, and we see the SPY ETF price action closing back above the 5 EMA all along. So the price action and the trend are still bullish. If we start trending downward and we close below this $341 level, I do think the bull trend will start to reverse into a bear trend. But as you can tell from today's price action, we got within $2 of that support level and started bouncing. So it looks like the support level was the gap closure, and if we start to see a bounce continue tomorrow, we'll know that we're likely done with the bull shakeout and we're heading higher. So when we're in a strong bullish uptrend, it's very likely these moving averages are going to continue to act as support. And remember, we saw the 13 EMA act as support on October 6th, and that was telling us to look for that level to act as support again. And you can see that history did repeat itself, and we did see another bounce off the 13 EMA. So you want to look back in the past and see which levels have previously been support, and you want to look for those levels to hold up as support in the future as well to confirm your bullish bounce. So remember, we do have a gap down at 329, but I'm not expecting that gap to get filled unless we go into a bearish trend, which we are very far away from a bearish trend right now. We're in a very strong upward bullish trend. So we want to trade off of our support levels up here in this range that we're trading in now. And we want to look towards price targets of 355. And if we can break back above 355, we do have price targets into the 360 and 362 range. Now, don't forget about this magenta trend line, which has been a very strong resistance level. And you could see right back here when we got close to that resistance level, it did start this pullback. Now, that could change and we could break above that trend line eventually. But that has been a very important resistance trend line going all the way back to 2018. So we also see the volume. There was no unusual spike in volume today, and it was mostly a sell-off day. Even though we closed barely in the red, it was a down day. So we didn't see a huge volume of selling today, which is great news, and that means it's more than likely that the bullish trend is going to resume very soon because we're not seeing big money dumping those positions. So it looks like this was just a completely normal, healthy pullback after the stock market created some gaps and got overextended outside the upper Bollinger Band. And it's likely that that cool off is over and we're going to resume back upward in this strong bullish trend. So next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF, and we do see the Nasdaq 100 also came down and started squashing this gap below. If we switch to a 1 hour chart, you can see that the price action got down into the gap but did not fully close the gap. That gap will be fully closed at a price target of about $286. But we did find support off the top of that gap and we did start bouncing. You could see on the 1 hour chart that after the open and the close of the first hour, we continued to head higher to end the day. So going back to the daily chart, we did close right around that 5 EMA and we still have bullish price action and bullish trending on the Nasdaq 100. So we still have our upside price targets of 296, which we've already hit one time and then bounced downward. So our next level higher after 296 is this previous all-time high right around $302. So it looks like the bulls found their support they needed today, and it looks like these stock market indexes are ready to start heading higher. Don't forget to watch the moving averages as support if we do get another day of selling. I would expect to see the Nasdaq 100 come down and close the gap at $286 and possibly bounce off of that 13 EMA. Next up is the Dow Jones Industrial, and we're looking at the DIA ETF. And we see the Dow Jones did also bounce off of its low of the day, but did close just below that 5 EMA. So the price action's still bullish, but it's not as bullish as the SP 500 and the Nasdaq 100, but we still do have a very strong upward bullish trend. So our price targets on the Dow Jones remain 289, and if we could break above that, we need to break through this resistance trend line at 291 to get to our next price target of around $293. So you can see today the Dow Jones closed barely flat on the day and it was on increased volume. So there definitely was some buyers that stepped in and bought that dip today. And that's what you would fully expect to see when you have a strong upward bullish trend. There's going to be a lot of people buying the dip because the trend is in a very strong upward momentum trend right now. There's going to be a lot of dip buyers. So anytime you're a trader, you want to follow the trend and you want to follow that momentum because it's always going to favor your trade to the biased direction, and that is right now to the upside. So even if you think valuations are very extended right now, you can see the stock market does not care what you think and it's ready to start going higher. Next up, let's take a look at the VIX, which is our fear indicator, and we see the VIX was all the way up into the 29s today before closing down around 27. Now this is good news and bad news because we did see the VIX go up on a down day. However, we are at a VIX level right around 27, which means volatility is still fully in this market, which means fear is still fully in this market. So as the VIX elevates and if it gets back into the 30s, we know we can get back into those -4 and 5% swing days, which could absolutely destroy your trade in a heartbeat if you don't have any stop losses set. So right now there's definitely risk in the market, and we see that with the elevated VIX level closing at 27, and we see the VIX did close back above the 20 simple moving average today. But the VIX trading at 27 is just a warning sign because next week we could see the VIX continue its downward trend, and we can see the VIX is still forming lower highs and lower lows as long as we continue to trend downward. So right now, just know there is risk and there is fear in this market. So you want to be trading with a lot of good risk management, and you want to set those stop losses below support levels in case the market starts to make a turn for the worst. We still have that 5 EMA trading below all the moving averages, so it tells us that the trend on the VIX is still downward. So I'm looking for the VIX to come back down to 23.5 level as we see the stock market continue to head higher. All right, next up is the financial sector, and we see the financial sector came all the way down to the 50 EMA, found support, and bounced all the way back up to just below the 5 EMA. So even though we had a bearish price action open, we did get a very bullish price action close, and we're now trading back above this trend line here. We also see the trend is still very bullish because that 5 EMA is still trading well above all the other moving averages, and all of the moving averages down here are upward positive sloping. So it looks good for the financials, and we're looking for the financials to start coming out here and break into a new daily higher high, which will tell us the S&P 500 is likely to form new all-time highs this year. Next up is the industrial sector, and we see the industrial sector also looking very bullish, closing up 0.36% today. So financials and industrials looking bullish is absolute great news for the S&P 500 looking bullish, and it's likely we're going to see a continuation of this bullish price action and trending carrying over into the S&P 500. So as you can see, the sectors are looking great, and it's looking like the strength is going to follow into the S&P 500 very soon. Next up is the healthcare sector, and we do see healthcare continuing to cool off, but still in a bullish trend because that 5 EMA is still trading well above all the other moving averages. Now healthcare is looking like the worst sector of all ever since it hit its previous resistance level up here, but it could just be cooling off, coming down to the 50 EMA to test support, and might bounce back up and go test this level yet again. So it's still too soon to say, but it does look like the bullish trend is still fully intact, and it could afford another day or two of selling, and healthcare could still remain bullish. Next up is the US dollar, and we're looking at DXY, and the US dollar did go up today 0.4%, finding resistance right around the 50 EMA here. Now the dollar did go higher on a day the stock market went lower, which is telling us that that inverse correlation is still in effect even after we saw the opposite happen yesterday. So yesterday looked like the fluke and it looked like the exception and not the rule, because we see the inverse relationship carrying over yet again today. So if we zoom in on the trend here, it looks like that 5 EMA is trading just below the 13, and we could be starting to witness the US dollar regaining into a bullish trend. But it's still too soon to say, because if the dollar continues to trend downward after this resistance level, that 5 EMA will remain below the 13 EMA and that bearish trend will remain intact. So if we expect to see the dollar go lower, we would expect to see the US stock market continue to go higher. So we will continue to watch the dollar and look for that inverse relationship. Next up is gold, and gold is still consolidating right above all of these support levels, and it is still trading above all the moving averages. So the price action is still bullish, but the trend is very neutral right now, and we're really just going sideways on the trend. So we're looking for gold to break out above 1900, come back down, test it as support and bounce, and that would be a great entry on gold, and that could trigger the next gold bull market. So we're going to be patient and we're going to continue to watch and wait for gold, and we could have a great buying opportunity very soon if we can get this break of resistance and this bounce off support. Next up is Apple, which is our market moving stock, and we see Apple came down below today, started squeezing this gap, closed a little bit, but the gap still remains open. So Apple did find support, and we actually did get bullish price action on Apple, closing back above the 5 EMA yet again, and the trend still remaining very bullish. So it still fully looks like Apple's ready to go back up to its $127 level. And if we could break above 127, our next price target is somewhere around $130. So it looks like the Apple bulls are still fully in control, and we could see on the volume there was not a lot of selling today, and most of the volume was actually going into buying. So that's good news, because we know Apple is that market moving stock, and if we expect to see Apple go higher, we would expect to see the rest of the stock market go higher with it. Next up is Tesla, and we see Tesla still holding up its bullish price action, still closing above the 5 EMA, and that bullish trend is still intact. So the Tesla bulls still look like they're fully in control, and I'm still fully expecting to see Tesla come up here and test the previous all-time high at $503. Look for the Tesla bulls to try to break that level and get up here to 530, which is our next price target. And if the Tesla bulls do get rejected at the previous all-time high, we could still come back down here and bounce off support and get one more attempt at it. So overall, the Tesla bulls look like they're fully in control, and I'm fully expecting to see $500 price target on Tesla soon. Next up is Bitcoin, and Bitcoin is still holding up that very bullish trend, continuing to close over that 5 EMA. You could see that the 20 simple moving average is breaking away from the 50, which means that the medium-term bull trend is also gaining momentum. So I'm looking for those Bitcoin bulls to break out above 12,000 and get ready to start heading towards $14,000. So going back to the SP 500, you could see the whole entire stock market is still bullish. We're still getting bullish price action, and we still have bullish trends all around. And the only real weakness we're seeing right now is healthcare, and it's still looking strong as well. So overall, it still looks like this was just a cool off and a bull shakeout before we resume our upward trend back to price targets of 355 on SPY. But don't forget to manage your risk and put those stop losses at the support levels you're buying at. That way, if we do get a turn for the worse, you're going to be protected to the downside. We are probably trading in that last hoorah, meaning if we get up to these price targets, this could be a temporary market top, and we could see a correction going into the US election. So remember, we've had a great year ever since the crash in March, and we don't want to start getting greedy. So control your risk very tightly and pay attention to these important support levels. So if we do start breaking below 341, that will be a huge warning sign. And that's probably the most important support level you want to start paying attention to right now. And also, if you have not already, go ahead and add this magenta resistance trend line to your charts. All you need to do is do a 2-point line with the bottom of 2009 and the high of 2018. And you will be able to track this resistance level, which has been so critical, tracking very important tops in the market. So good luck, everybody. Please remember to help me out by smashing that like button. I really hope these videos are helping you out. And if you haven't already, go ahead and subscribe to my channel so you can follow along with all of my daily updates. Thanks for watching, everybody. And as always, I will see you in the next episode.